Good evening, ladies and gentlemen. Thank you so much for joining us for this very special webinar on behalf of Invest India, the National Investment Promotion and Facilitation Agency of the Government of India, Startup India, and the Embassy of Brazil in New Delhi. We wish you a very warm welcome to the third India-Brazil FinTech webinar on open banking. I'm Shruti Chandra, representing Invest India, where I lead the BFSI sector. Sorry, Lucas, I think you're on mute.
Hello, good evening for India, good morning for Brazil. My name is Lucas Brito. I'm a diplomat from the Science, Technology and Innovation section at the Embassy of Brazil in New Delhi.
Thank you. We're extremely honored and privileged today to have amongst us distinguished members from the banking ecosystem, interestingly representing all bands of the spectrum, from traditional bank, central bank to neobanks, from both sides, the industry and the government, to discuss the current and future role, as well as the pervasiveness of the open banking in both the key markets. The focus will be to delve into the plethora of opportunities on the horizon with open banking and the associated risks for the industry. I would now request Lucas to quickly introduce the Brazilian panelists.
We have here today with us from Brazil, Mr. João André Pereira. He is the head of the Financial System Regulation Department, responsible for directing the project of the regulation area at the Central Bank of Brazil. Before joining the central bank, he worked as a risk manager for financial institutions in Brazil. He holds a PhD in finance from the São Paulo School of Business. Also from Brazil, we have Ms. Mariana Cunha Melo, Public Policy Manager of Nubank. Mariana has been responsible for developing the guidelines for open banking and instant payments within Nubank. She joined the company's public policy team in early 2018. She holds a Master of Law from New York University and is a PhD student in public law at State University of Rio de Janeiro. She's the author of books and articles on law and internet regulation.
Thank you. And from the India side, today we are honored to have with us Mr. Topendra Bhattacharya, Head Digital Banking, Direct Banking and Analytics, RBL Bank. Topendra is, in his current role, leads various digital transformation initiatives within the bank. He drives innovative solutions for consumer-facing digital channels and open banking foray with fintech and neo-banking players. He has spent a large part of his career building retail and business banking for large banks such as RBS, ABN AMRO, and ICICI Bank. Mr. Bhattacharya is an alumnus of the prestigious INSEAD, Singapore. Thank you so much for joining us today, sir, and we look forward to hearing your insights. Secondly, we have Mr. Anupam Bagchi, Chief Business Officer at Jupiter. For the last 18 years, Anupam has been instrumental in building and scaling up business of credit cards, consumer lending, and payments in organizations such as Stanchart, Axis Bank, NPCI, and Kotak Mahindra Bank. As an industry leader and a founding member in NPCI, he has played the crucial role in building the payment network for RuPay and Aadhaar payments. He also started transit payments in the country by launching the first interoperable payment system in Kochi Metro. Thank you so much, Mr. Bagchi, for joining us today. We look forward to hearing from you.
Before we begin with the webinar proper, I would like to inform the audience that you can post questions for our panelists during the duration of the discussion, and we will pick them up during a dedicated Q&A section at the end of the webinar. And how can you do that? Just write your questions in the chat boxes of the platforms you are viewing this on, and our team will pick it up.
Thank you so much, Lucas. So ladies and gentlemen, we'll now be beginning with the panel session. So my first question is to Mr. João. Thank you so much, Mr. João, for joining us. And the question for you, sir, is that for the benefit of the Indian audience present here, could you please throw light on the intent behind open banking regulation by the Brazilian Central Bank and its implementation in the 4 incremental phases?
So first of all, thank you very much for having me here. It's a pleasure, it's an honor being here with you and can have this opportunity to exchange ideas and views about open banking, which is a very important project here in Brazil. So, and good evening for you in India, good morning for everyone in Brazil. So thank you. Let's start with the question. So the open banking implementation is in Brazil is a priority. It's a very important project within our work agenda. Actually, we have a very comprehensive work agenda in Brazil, which we call Agenda BC Hash, and we have different projects, mostly most of them supporting innovation, supporting competition, supporting the process we are seeing right now. And open banking is one of the most important of them. As same for our project of instant payment and sandbox and other innovation projects. So the objective of the open banking project is enhance efficiency of the financial system by promoting a more inclusive and competitive business environment. But at the same time, we have all the concerns about security, about financial stability. So we are balancing the both things in this project. But in the side of efficiency, we see the sharing of information in a security manner can reduce information asymmetry and provide a better credit market, provide a better pricing of products, which is a very important issue in Brazil. We have interest rates in a level that we need to target this issue. So I think this open bank will help a lot on that. And also we have a question of a point of financial inclusion, which is also important in open banking. We will target a lot new products and new people, unbanked people, which is also an issue in Brazil. So it's provide environment, ecosystem in which we can other newcomers can reach these people, unbanked people, and of course with better services and even incumbent banks and newcomers and fintechs, and they can get this environment to have better services. So in the end of the day, we expected that open banking will play an important role in enhancing the use of credit information in the Brazilian market, so decrease interest rates, empower customers with more inclusive financial systems, so financial inclusion, and also, of course, fostering competition with a greater role for all participants, and of course, newcomers, fintechs, and also incumbent banks can compete in this new environment. So let me give you just a brief overview of the open banking project in Brazil. So the regulation is just published in the beginning of the year. In this regulation, all the big banks must comply with the open banking regulation. So they must open the APIs and the information through this ecosystem. And all the participants in the open banking are licensed banks. I mean, regulated institutions at all. So not only banks, but fintechs, payment institutions, and all kinds of licensed institutions. So we have an important point in the project is we have a reciprocity rule, which means that if a smaller institutions, for instance, a fintech, decide to collect its client consent and collect information from other institution, these smaller institutions must also to open their APIs. So it's a symmetric regulation. Besides the regulation, we defined an implementation structure with a specific governance composed by representatives of the market. And this structure is responsible basically for submit to the Central Bank of Brazil the technological standards and APIs. And the central bank will analyze all these standards, approve and include those standards in the regulation. Of course, central bank will participate in all the debate in this structure, in this governance. So we are calling this structure, this scheme, as the assisted governance. So regarding the implementation, we have 4 phases. It's going to be implemented in gradually, of course, but we have a very challenging time frame. So it's already started, and it's going to end until in October 2021. So we have a very, very short time frame, but we do believe that it's feasible. Mainly because we are seeing all the implementation, all the other jurisdictions and errors and good things that are being implemented in other jurisdictions, and we can learn a lot about that. And so we believe this time frame is feasible, and we're gonna have this until October 2021. Of course, this is a working process. It's not ending in 2021, but just the framework will be in place on this date. But it's an evolutionary process, and we're gonna see. So the first phase is up to November 2020. Is about open data. So the first phase is the APIs with no sensitive data, or with no personal data, just the financial institutions data. So information about, for instance, location of ATMs, information about what kind of products they offer, what kind of some distribution about interest rates and fees they charge. So this phase will provide to the ecosystem the capability of compare institutions. So I think it's going to add value even with this open data, with this data without personal information. So the phase 2 is up to May 2021, and now we're going to have, in this phase, we're going to have personal data, so sensitive information. So besides the APIs, we're going to have all the process of authorization, all the process of consent, and all the security issues around those definitions. So, and we have two different types of information. KYC information, so information about the IDs and how to identify the clients and information regarding those clients, and also transactions data. So all the transactions, the payment transactions, the payment transferring, and also credit information. So credit operations that the client get, loans that the client get, will be in these transactions data. So the third phase is up to August 2021, and here is a phase about sharing services and initiating payments. So we're gonna have in this phase also important role for the payment initiators, service providers. It's a new institution we are creating right now, but we're going to have the payment initiation through those APIs. And we also will have offering of credit operations through those APIs. So it's not just payment initiation, but also credit operations. You're going to go through those APIs. So finally, we're going to have the phase 4 up to 2021. And this is about other type of information. So we have a broader scope for open banking in Brazil. So we are more a kind of open finance project. and in this phase, you're going to have information about foreign exchange operations, investments, insurance, open pension funds, and other kind of products, not only in the banking system, but broader. So that's it. Those are the phases and the objectives of the open banking. Thank you.
Thank you so much, sir, for such a detailed response. I certainly learned a lot, and I wish you all the best for the 4 phases. It's a long journey, but it's very enlightening to hear the great work that you and your colleagues are doing. So thank you so much, Lucas. Over to you.
Yes, thank you, João, for the details you provided on the implementation of open banking regulation on open banking in Brazil. I will now turn to Mr. Anupan. How is open banking in India different from other parts of the world, such as Europe? And what are the common elements observed globally? And also, what are the challenges in building a good framework for the system in this space?
Mr. Anupam, you're on mute. Sorry.
How is it different or not? I think open banking in India started not in a very formal way in India. It started with a payment system called UPI, which kind of democratized payments, and with identity stack Aadhaar, which was more a citizen's identity stack, which democratized Aadhaar, the entire KYC leg. But if I see various parts of the globe, primarily Europe, US, and South America, if you look at all the banks in Europe, whether it is Monzo, whether it is Starling, Revolut, if you read their catchlines, right, most of the, their taglines say ease, simplicity, speed, kind of taglines which are there. So, whereas if you take to India, probably our payment structure was already real time for last 10 years time. Our onboardings have been in 3.5 minutes for the last 4-5 years with banks like Kotak, 811, DBS, RBL, and so on and so forth. So those aspects probably don't apply to the country, because I think last decade was spent really on these stacks, which is known as the India stack. What is common, I think, is certainly that I'll bring the customer service angle, so, or the customer experience angle. So today, if you go to any part of geography across the globe, there is a sense that the service consumers get from their banking ecosystem is a bit suboptimal. And that is where the tech disruptors kind of come in to enhance, because today, from food delivery to cab ordering to ordering your fashion goods, you have a certain level of expectation of what experience you want to have. Whereas experience probably in the last 10-15 years, we have not seen in retail banking across the globe, whether it is during account opening or whether it is during a chargeback process which happens. Or, for example, if you want to take 20,000 rupees INR as a loan, so you can't go to your bank and say, hey, give me 10,000 rupees. You have to ask a friend for 10,000 rupees. Why doesn't your bank do that? Similarly, if you have 50,000 rupees in your bank account as savings, which a 25-year-old will be having, that is wealth for him. And but wealth management has been like a privileged class for, above a certain threshold of savings or income anybody has had. So that's one facet of services and experiences which have not been available to consumers across the globe. And I think there, from whether it is Nubank or Monzo or Chime in 3 geographies I'm speaking about, are trying to bring on board. The second aspect is the digital experience of the consumer. So, and I'll speak specifically with respect to India, is if you experience bank A to bank B to bank C, their mobile banking or digital banking properties, you will not really find a differentiation as to say that, oh, which one do you like? So you may have a like that I like a Swiggy food ordering app better than a Zomato, but you will not really have a great preference to say that from bank A to bank B, I have a preference for the mobile banking app because or the digital property all looks the same. So, so that's where I think consumer experience is here for disruption, and that's what we are also trying to do. Lucas, I missed your third question. If you can repeat it for me.
Yes, of course, Mr. Lupan. The question was, what are the challenges in building a good framework for the open banking system in this space?
Yeah, I think since, as Andre was saying, of a formal mechanism of open banking in Brazil, which is getting formulated, we have followed a bit of an informal mechanism of creating an open banking stack. As I said, UPI was one step, Aadhaar was another step. Now the the aggregation part, which is coming into play, where people can give consent for sharing their bank account information to any third party, is the third framework. But we don't have a common framework. And as Jupiter, for instance, is coming into play, and we are working with few banks, since there is no common framework, you face the huge challenge of then working with banks to find common ground that, from a compliance perspective, legal perspective, operational risk perspective, infosec perspective, how do you deal with a lot of contradiction challenges? Because what you are trying to do is to bring the bank out of the bank. When I used to work in a bank and used to work in digital banking, I used to say this is a bank within a bank. When we are trying to create a neobank, we say that we are trying to create a bank outside the bank or taking the bank outside the bank. And therefore, absence of that framework kind of pushes a lot of challenges with respect to interpretation. And my friend Topendra is there, and he will kind of agree as to how different, if you have to deal with three banks, compliance, infosec, legal teams, then the entire interpretation of what you can take data outside, how you can use the data, what services you can give to a consumer, what will be the authentication mode of those basic hygiene questions come into play. And those are the challenges I see for the first level of evolution as we speak of. Once we are through with these challenges, I think the ecosystem will take the next leap. The second set of challenges, Lucas, is that in India, there are close to 48-50 commercial banks, and everybody in a different state of digitization. And although open banking APIs are, some are ready, they are all in a state of flux with respect to readiness, because a complete open banking stack is not really available with anyone in totality. So when you work with a bank A or bank B, then you have to kind of get on a lot of factory production from a design to an implementation framework on getting those open banking APIs, those working steadily and having consistency in that. So that's the second leg of challenges which I see evolving. Once these two stabilize in the next 2 to 3 years time, I think we are here for a big leap in the years to come with respect of democratization of banking in the country.
Thank you, Mr. Lupin, for your answer. We can see that India and Brazil are in different stages of implementation of open banking and experience of open banking. And now I'll give it back to Shruti. Please, Shruti. Sorry, Shruti, you're on mute.
Sorry, thank you. Hi, Mariana. Thank you so much for joining us today. So the question that we have for you today is, finance experts are of the view that Brazil is poised to become a major neobank market, fueled by favorable market factors and friendly regulations. How does the open banking regulation incentivize the entry of new fintech entities in the evolving market, as well as ensuring the sustainability of older ones? And the second question related to that is, how does a new bank perceive this increased competition?
Sure. First off, I would like to thank you for having me. It's a real pleasure to be here. I've been working with open banking and Nubank for quite some time now, about 2 years and a half, and I'm thrilled to be here to share a little bit of what we've been discussing at Nubank. So, as to your first question, how the open banking regulation can incentivize new entrants and this whole fintech and neobank ecosystem in Brazil, the main thing here is cutting out asymmetries. So, as João André mentioned in his remarks, one of the biggest asymmetries in the Brazilian market today is the asymmetry of data. So today, most of the credit and deposits and data about customers are within the largest institutions. So it's hard for a new entrant to get in this market, this credit market, because as we know, more data, more information about clients is equal to less risk and less cost to offer credit. So to extend credit. So the first level of impact for open banking in this new bank and challengers ecosystem is definitely the access to data. So that this new entrants can really compete with the big consolidated institutions. Another aspect, however, is that open banking breaks the exclusivity relationship between supply of financial services and distribution of financial services, right? So when we have today, for you to access your bank account details or to manage that account, move money from a place to another, you have to interact with your banking app, your specific banking app. And with open banking, at least conceptually, we could unbundle those two things, and you can have a competition within the supply part of this value chain, but also competition separately have also competition in the distribution or in the interface with the client. So this is also something that really incentivize this ecosystem within in Brazil, because it's not just that if you want to get into financial services, you're going to have to get full license and offer services so that you can also compete for the interface. You can do this separately now. So it helps new entrants to start out and offer maybe less regulatory heavy kind of services. So that's also something that really incentivize or might incentivize the ecosystem in Brazil with open banking. But a third aspect that I would like to highlight is more related to what happens, the consequences for the client, that end user that's gonna use those financial services. With open banking, since we have we potentially will see lower switching costs. So for a client to move from a bank to another, from an institution where they had 10 years of relationship to a new institution where they believe they're going to have better services, this cost is going to be much lower, right? And also comparison between financial services is also going to be much easier. So one thing that we can expect is for clients and for this demand to be more elastic. So clients can be more sensitive to the quality of service and to the quality of the interface, which is a good which is good news for new entrants who are investing in better services, lower costs, and better user experience, because this can better translate into more business for those new entrants. So I think those are the three main things about the open banking regulation that may really help boost this ecosystem. Now, for your second question, more related to Nubank, one thing that's important to keep in mind is that even though Nubank has close to 30 million clients, which is pretty impressive, we regarding to the credit that we extend and our deposits, comparing to the major banks in Brazil, we are still in our very early days. So we have a highly concentrated market regarding credit and deposits and data, as I mentioned. So we are definitely in the challenger and the new entrant side of the market in that aspect. But more generally speaking, our approach here has always been that competition is a good thing. So once clients can have more mobility and it's easier for them to reject the banks they are in right now and decide to look for better services and better user experience in their interfaces, this is good news for Nubank, right? Because our whole mission is to empower our clients and to provide the absolute best service. So more competition should not really have a bad impact on our long-term goals. We also have this perspective that with open banking, new functionalities are possible to be built, and this is something we see as new possible differentiators for us and for all the new entrants, really. So we see this as a great opportunity to use open banking as a tool to really live up to our mission to fight complexity and empower people.
Great. Thank you so much, Mariana, for such a candid response, and hopefully you'll continue to grow and keep on growing and take on more of the opportunity that's there. Thank you, Lucas. Over to you. Thank you.
Thank you, Shruti. Mr. Toprenda, welcome and thank you for being with us today. I would like to ask you, how is digital disruption affecting banks globally? Where does the rise of open banking fit into this picture? And lastly, what kinds of customer experiences can it help banks deliver?
Hi, namaste all. Thank you for having me here. Just to start with, digital is no longer, disruptive. It is a way of life now. I mean, given the scenario that we are in today, I don't think anybody can have a choice of being disruptive around digital per se and not have it there. And it is the underlying of most customer experiences today. And given the pandemic, the way it has hit us, I think all over the globe, things have got accelerated much faster and much higher, both from developmental perspective as well as from adoption perspective at the customer end. I'm sure we're seeing this on both sides of the globe, if I'm not wrong. So, given that scenario, my take, I mean, the way we see it from our bank perspective is that It is something that we are building on for some time now, and we began way ago in say around 2009-10 is when we started developing our scenario, and from there onwards we have been evolving in this journey. Now, if you say that that is something that has that is changed in the overall experience for customers, in today's date, there is a whole lot of customer experiences which are changing globally, and in terms of people adopting to digital modes and forms of transactions across different categories that they are working around. So it is not only banking that we're talking about in terms of adoption and mobilizing digital transactions. It is across various categories of interactions that they are having in a day-to-day life, which is which we call everyday of a life, is where we see various sorts of adoptions which are happening. So given that digital adoption is happening in the space, in all our spaces, right from our lifestyles around social media, our lifestyles around banking, our lifestyles around every other way in which we interact with various things, say an Uber, say food ordering, etc., etc. Everything is moving in a very fast-paced, evolving scenario. And now coming to banking from there, it is also another space where DIY models have started emerging fast and rushing into the experience world of the customer is something that we see that is evolving. Now, is that a risk to existing institutions? A view is that there are two schools of thought here. There is one school which says that if we don't change and we don't move towards that, towards changing into our own stacks on digital or our own services on digital, it will we will not exist. The other school is that whether you change or not, it is imperative now because the customer is residing in digital. Okay, so when you take both these views per se, what emerges is that digital transactions in banking is something which is coming more and more towards from three perspectives. One is the customer experience perspective, which I think was highlighted in some of my fellow speakers here. The customer experience is something which is critical in terms of how we deliver services going forward, whether it is banking or anything else. Okay. The second thing which is there is what is the democratization of the railroads which are being made available for this. So, for example, Anupam here mentioned about a couple of them which has got built in India. Am I audible?
Yeah. Yes, Topendra, please continue.
Sorry, I lost the link in between. My bad. So UPI is one major railroad which has got built. The other one is our identity platform which has got built in India, which is the Aadhaar platform which is there. There are other railroads which has gone built earlier, which is we have the entire income tax card which is there, which is called PAN card, which is permanent card, permanent account number card, which is available. These are all identity generation instruments which has got created to enable this ecosystem. Now that this ecosystem has got enabled, you will see more and more movement towards adopting this ecosystem by various types of institutions, which is in the bank and financial institution category. So I don't think there is much options which is left by anybody in this scenario to not get into the digital space per se, and therefore it is no more a threat for anybody. It is imperative. Now to come back to the country and the way we have been working around digital. Uh, like Joanne mentioned, it's been a phased journey. So it is a phased journey going forward. For us, it has been a phased journey for some time now, and it started maybe in the years around 2005, 2006 is when the entire OpenStack architecture started evolving in India. And typically the banking, it started with P2P payments to begin with, and it evolved from there and created an infrastructure for P2P payments. Suddenly we saw a lot of mushrooming organizations around the P2P payment space. However, at that point of time, it was primarily about banks able to sponsor these kind of platforms, because at the end of the day, the while there was a specific license which was actually handed over to P2P companies. And there was the accounting system which was left to banks, and therefore the entire governance and the accounting system was done by banks at that point of time as well, and banks enabled the entire piece. Then in the next decade, so between 2005 to 2015, the primary activity was around P2P payments. Then in the next decade came a scenario where there was a lot of lending startups which came up, and especially this was around micro lending and financial inclusion per se. And there was a lot of action during that in this period. In fact, we ourselves are well entrenched into the financial inclusion space, where we actually power about 3.5 million households across rural India to create both in terms of enabling them for livelihood and so on. So that's another space where we saw a lot of action in the last decade, which is about say 2010 onwards to around 2017-18 types. Okay, and lending became one of the primary items, and especially micro lending. Today we are talking about the OpenStack architecture for the enablement of neobanks. So if you see, historically India has been in this space. I mean, we have been there for some time now, and we've been building on the tailwinds which are infrastructure driven, which is primarily like things like UPI, PAN, NSDL, and then you have those were the architectures, like Anupam mentioned, the India stack per se, right? So these were things which enabled the entire ecosystem, and there were banks to sponsor these architectures, and the fintechs had a rolling time during this period, and we saw a lot of sponsorship, or rather funding, which flowed into India. A lot of VC funding which flowed into India during this period. Now, what was different between the traditional banks and these organizations? The difference was the way in which technology was perceived by these guys versus what was perceived by banks. Now, banks were generally monolithic creatures, or rather institutions, which had these solid systems, legacy systems which were built, and the primary intent out there was risk. So risk management was the primary item which was always catered to by banks. Then we moved into these fintechs, where what they got on the table was agility, and agility with which they actually improvised on the technology layer, which created very nice need-based transaction layers for customers. And that is the upside that they got on the table, and that is how all these ecosystems flourished, and both the banks as well as the fintechs made their way ahead in the system. And today we have quite large players in the market already in the P2P space and the lending space. From 2018 onwards, suddenly we saw a spurt in the request for building banks as an option, or rather neobanks came into space. So now the entire canon started to direct itself towards the API stacks the banks could produce for opening of say savings accounts, current accounts. So different types of models came into the market. You saw B2B2C models, you saw B2B2B models. There were some companies which came up with B2B2B2C or types. So So there were, these layers which were getting created just on a scenario where the bank was sponsoring the entire foray. The bank was also enabling the foray through the open API stack that they had created, and therefore these transaction layers for customers became extremely friendly. And also there were certain differentiated products which came into the market. Now, when I say the products came into the market, the products were standard, which were loan products or card products, but the way it was delivered became very different. So things like, late salary or easy pay kind of, building the entire lending infrastructure within the transaction happened. Now, these are things which have actually changed the entire way in which digital is being viewed today per se. So if you move from what I said between 2005 to 2008 and 2010, and from 2010 to 2018, during this period, what has happened is that the customer journeys have evolved drastically. We have seen very cool technology layers getting created on top of bank API stacks, and therefore what is visible now going forward is actually co-creation and collaboration, which will which will create an environment of a win-win between fintechs and banks, at least from an India perspective. And there is a reasonable support which is coming in from the government, while RBI or the regulatory bank regulators today have not come up with any specific regulations around the digital space and specific regulations for the neobanks per se, but there is a reasonable amount of enabling which is happening there. And all these tailwinds that I mentioned, which is UPI, UIDAI or Aadhaar, all these are government forays. I mean, Anupam is a veteran there, so he would be a better guy to mention these. But having said that, these are the enablements that the government has been producing, or the regulator has been producing, so that we flourish here in this space. And today, for some time now, at least for the last 15 years, we've been seeing enough and more evolution happening in the digital space, slowly but steadily. And it is looking bright. Just one word of caution here: as we explore the digital space, what is also happening is the vulnerabilities increase a lot. Okay, because while we move fast, there are people who are moving faster than us and who can game or dope the system. So that is something that we need to be very careful of. And coming from a bank perspective, I mean, I wouldn't have gone without talking about the risk part of it. So there is a reasonable risk in the way we create things, and at no point of time we should underplay the risk at the cost of customer experience. Yeah, so that is something that we need to be careful about when we foray into the digital space. But apart from that, I think there are brighter days ahead. Thank you.
Thank you, Topendra. As an RBL customer myself, I appreciate the efforts that you put into customer experience, being mindful of the problems that this may cause for the system as well. And all of us as banking customers, we have witnessed the rapid technological evolution in the banking system. Before we go to the next round of questions, I would just like to pose a quick audience question to maybe João or Anupan. If you could quickly answer, do you see open banking opening up globally? That is inter-country open banking model for broader use cases?
Can start. So I believe so. I think there's some space for this kind of exchange, but of course we're gonna need a lot of coordination around regulators, and also we're gonna have the standards in both sides. So it's possible, but we have a lot of work to do, and a lot of talk to do with each other, among regulators, jurisdictions, and banks, fintechs, and everything. Just very brief.
Mr. Anupan, would you like to add something?
Yeah, I mean, I think Raw said it rightly. I think this needs regulators to talk to each other rather than the fintechs talking to each other. Fintechs can always talk to each other. There are two, three facets to it, right? For example, Revolut, Monzo are kind of going across their, native geographies into other countries. I'm sure new banks will probably also go to other geographies in future. In fact, just some bits. His new bank, David actually happens to be an investor into Jupiter, so the Brazil-India connection kind of cements it from that perspective. But coming back, I think the audience used a very appropriate word called use cases. I think the use cases will flow from native geographies, and for example, Indians in Middle East, right, or Indians in US, or Indian students in US market. So those use case banking models will form, and initially it will be more about transfer of money and how can money kind of exchange between two geographies seamlessly in the existing guidelines, and the railroads be made simple and efficient instead of taking time. I think another aspect which was talked about switching costs, and therefore cost being relatively low. So that is the starting point of inter-country, inter-geography neo-banking models or open banking models to collaborate. Once this starts happening, the next phase will come in to play. So I see that taking place. For example, if I draw a very parallel use case from the card payment world, you have EMV code specs, right? I mean, EMV code specs defines almost every payment you made on a chip card, which rides on Visa, Mastercard, Amex, and therefore, irrespective of an Indian card getting accepted in Brazil, it's seamlessly accepted, and the entire transaction money transfer happens very seamlessly. So I don't see any challenge that from a tech perspective that this is not possible. But there are AML money laundering guidelines, to be taken care of, and so on and so forth. So it will involve some kind of evolution. But I think the use cases will start with people of the same geography going outside or staying outside, and that being facilitated by a tech rail.
Thank you, Anupan. I would like you to stay with us for the next round of questions. How do you think that open banking is influencing the types of payment services and technologies being developed today?
How is it going to impact? What kind of new players will come in? I think that's very interesting in any country's play. So I think the first kind of players. So there are two kind of players which will come in. One is what are they facilitating on the B2B side of enabling payments or open banking, and that can be anything, facilitating API stacks, facilitating KYC information. For example, we recently have a guideline on video KYC. So on a video, you can have a KYC done. So there is a plethora of fintechs and tech stacks which are building on video KYC. On biometric, we already have companies which have done that. So each stream gets a certain range of B2B players whenever the entire fintech evolution happens and open banking happens. So it starts with onboarding of the consumers, then it goes to the payment rails, and then it goes into lending and other stacks. So payment rails, you will have aggregators, merchant acquiring, fintech, which will facilitate APIification, as I generally call it, of the entire stack between various stakeholders. And then lending entities will come in. Either they will come with lending platforms, which enable consumers to be lent, or the entire flow from credit bureau to the final money reaching the consumer very seamless. So that is three kind of stacks or four kind of stacks which any kind of come into picture on the technology side of open banking, and typically that is where banks collaborate with those B2B fintechs, because they enable them to have a wider reach. What B2C fintechs do is to collaborate with these B2B fintechs or collaborate directly with banks. There are also another range of players which come into play, which is essentially switch providers which do transaction switching, which do core banking solution, which also need to evolve in the new world. So all these stacks have been quite old, and globally these have been very mainframe oriented stacks before. And as we progress into the API world, these stacks are changing, and new kind of switch providers are coming into play. New kind of authentication providers are coming into play, who provide fraud authentication, identity authentication mechanism, second factor authentication mechanism. So as we evolve the model, there is a completely new stack of people on B2B side and B2C side which come into play in any geography. And I assume that it is not any different in any part of geography, and it is generally a very common phenomena approach. We have seen this through our VC companies, especially Sequoia and Metrics, who happen to be our investors, and what kind of companies they invest in other geographies. They are very, very similar, and actually they bring all those learnings when they interact with us in this particular geography or their investee companies. So, so this is how the tech stack evolves or will evolve, or these are the kind of companies which will come into existence.
Thank you, Anupan. As Nubank is one of the major players in digital banking in Brazil, I would also like to pose the same question to Mariana. How do you see the digital payments evolving in the near future with open banking?
Yeah, I agree with Anupan on this being a sort of a global trend, both on the payment side and on the strictly open banking data side. So what I see in particularly in Brazil and several other geographies is this push for instant payments for in a first sort of trend, and but also for less complex structures for making payments. And so what we've been seeing on both this real-time payments and the open banking trends in Brazil and elsewhere is building infrastructure to fight fragmentation. So I see this as being a big trend that is going to enable a lot of competition on top of that, and also it really reduces the cost to join those markets, those ecosystems, and help build a bigger reach for those companies. So I see as the final frontier for digital payments and digital services is this whole approach of building ecosystems that enable communications directly from one player to the other through APIs, for instance, or that enable reach any sort of company within the same ecosystem, which UPI and Pix in Brazil also enable. So I think this is sort of the main trend that I would bet can land us on a future with more digital payments and services in general.
Thank you, Mariana. Shruti, go back to you.
Thank you so much, Lucas. So this question is for Joao. Joao, Brazil Central Bank has come up with a novel approach of assisted governance for rolling out open banking regulation in the country. What are the foundational pillars for this approach, and how does this framework help in achieving BCB's aim of stimulating innovation by providing a level playing field to new fintechs in Brazil?
Well, this is a good question. Let's see if this novelty will work, right? So we believe that, but it's a new thing, really. So in my view, the regulation should be neutral in terms of technology. Otherwise, all the innovation process may be impacted. We can hold all the process, so we need to be neutral. But at the same time, we know by the lessons learned by the implementation, for instance, in the UK, that the technological standards are the key for open banking. And the best one to define those standards is the market. And also, we know that this is not an easy task. It's always difficult to put everybody together in the same table and discuss and define agents with different interests, with different processes, different market powers. So we defined with this assisted governance, we are trying to combine the security of a regulated environment with the agility of the market in defining technologies, but also trying to participate in this process to avoid major problems. So to be more specific, we defined the regulation initial governance framework of 3 layers. A strategic layer, which is a board composed by representatives of different segments of the financial system with the same voting power and representing all kind of segments in the financial system. And they have the responsibility for defining the guidelines for technical groups that will define all the technology and submit to the central bank. You have a second layer with more administrative, the secretariat, and we have a third layer which is the technical groups. And those groups, the discussion, the technological discussion is there, and we are participating in all this debate. And after they define that, this board or this strategic part will approve and submit to the central bank. And of course, central bank will follow the technical discussion and the board discussion, and then we're gonna bring all the standards to the regulation. So we have also the regulation process to make some adjustments in this process. So it's a kind of adjusted OBIE as in UK when we see the market discussing and defining the technology, but with the participation of the central bank, of the IT group of the central bank, and then bring everything to the regulation in the last step, and adjusting all things to define the best standards. That's basically that, and I hope that will work properly.
Shruti, please unmute.
Thank you so much, Joao, for a very detailed response. I can see that a lot of work has already been done, but a lot has to be done also. So there's a long way ahead, but a lot of opportunity as well. Mariana, the next question is for you, which is self-regulation has become an important pillar in Brazil's open banking regulation to avoid excessive centralization of control. What steps does Nubank propose to streamline these technologies used in open banking? And what will be the benefits of this standardized communication to create a truly democratic financial sector in Brazil?
Thank you for your question. Well, first off, I would love to elaborate a little bit on some of the concerns that have been raised about this process of self-regulation. And to be fair, I think it's a great approach to don't centralize too much the decisions, and also take advantage of the market knowledge about how to best make this kind of things work. I do have a concern about design by committee, which is, there's a saying, which is, a camel is a horse designed by committee, which emphasize the potential troubles in incorporating too many conflicting options in the design of a standard, when you have to make concessions and compromises, and you end up with many features that are there just because of the dynamic of building this standard through through a committee, right? But this is being an interesting experience, and I think we've been through the first phase for this self-regulation, and I think it went really well, actually. Although we still have those concerns, I think we should be mindful every step of the way not to fall into this pitfall. But I'd like to focus on your question about, first, about the benefits of having a standard, because this is very, very interesting discussion we have across the globe. Because you have, for instance, in the US, where you have no regulation and no standards, no regulatory standards. We have in Europe regulation, but with no regulatory standards for most part of the issues. And we have in the UK, where we have regulation and a standard, a mandatory standard for those APIs. So, in my perspective, it's really important to have both of those things, both a regulation and a standard. As for the standard part, the main thing to me is it reduces the cost of integration. So for you to integrate, for you to access data from one player, or from all the players in the market, your cost for integration should be relatively the same. So this is important to reduce the barriers to entry this market, and also to reduce in a way the dependencies of intermediaries who make these integrations. So this is the first aspect for which a standard is important. The other one is, we talk a lot about the potentials of open banking, and conceptually everything that open banking can do for the market, for the consumers. But what is really important to keep in mind is that without the technology, the underlying tech that enables all these kind of things, we can't live up to open banking's potential. So depending on the technology, we will have different aspects. We will have different levels of user experience, of cost to integrate, of cost to operate in this ecosystem. The technology also impacts trust. So this is very important it's important to have a standard that can deliver on all those important properties that we want to see in open banking. So now, as to your question about how to streamline the technology, I would say there are two major steps, and I'll get into a little bit of more detail on the first one. But I think the two main steps are, first, standardize what's the baseline experience, what's baseline access to data. For the reasons I just explained, it's important to have a minimum viable experience so that this ecosystem can really grow and gain traction. And we see this in the UK experience, how important the experience to share data, to authorize, and the consumer journey, how important this is for end users to actually use the open banking features. So it's important to have that, and I think the central bank is doing a really good job defining what is this minimum scope and minimum experience that the participants in the open banking ecosystem must oblige in Brazil. And the second step that's equally important is to leave the door open for evolution and extensibility, because the flip side of the importance of having a strong standard is that it's typically harder to evolve a standard that it's in the regulation, even if it's built and expanded through self-regulation. So it's important that the standard really leaves room for evolution, and there are several ways for you to embed this in the specification, and it's also something we've been pushing a lot to make sure it's contemplated in the specification. Now, as to the first step I mentioned, I mean the importance to standardize the baseline experience and baseline technology layer for all of this to actually work. There's a few things that we understand is absolutely important to contemplate. So first is to have a lean specification. That means it's really important not to have those standards that really specifies too much and specifies things that are not important for the communication to actually happen. So this is always a very conscious, and we should always be mindful to make sure this is a concern every step of the way. The second one is security by design, and this is something that is not so obvious when you are building this kind of standard in a committee, because you have separation of competencies and different scopes and different groups, but it's really important to have security being thought of and being incorporated in the standard in everything that we do. This is another thing. Well, usability should also be have impact on every decision we make, because of the reasons I just laid about how we see that in the UK experience, how important it was to make sure we have a minimum user experience that actually that really works. Well, quality of data and means to get the data. So it's important to have to apply best practices of distributed systems in order to make this integration and the technology that we use, the means that we use to access this data, it should be really sharp. Should be cost effective, so efficient, sorry, so that we actually live up to the potential of reducing costs to enter this market, to enter this ecosystem. And finally, it's important to go back to the point of being future proof. So adding, and HTTP protocol allows a lot of room for evolution, and this is something we should be always mindful of.
Thank you so much, Mariana, for your response and giving us the pros and cons as well, which was very detailed. Over to you, Lucas. Thank you.
Thank you, Shruti. We have so far touched upon the technological evolution that has disrupted the banking industry, also the customer experience. One thing that as customers, I think we all are very much concerned about, considering how much of our data we give up to in the digital economy, and especially so in the banking sector. So as we are running out of time, one final question maybe to João to get a regulator's perspective, and to Pendra from RBL. How have you been addressing customers' concern related to privacy invasion that some associate with open banking? Topendra, please unmute.
Thank you, Lucas. So I will pick it up from where Mariana just left. I think data is the largest concern that is there in this entire structure, and a seamless, homogeneous share of data across the two platforms that we're talking about, whether it is an open stack architecture from a bank to a fintech, or otherwise when we are talking about flow of data which is getting aggregated at a fintech's end, in cases where where the entire governance model is much better, in countries where the governance model for open banking is better. In that scenario, the entire risk of data in terms of flowing out of the system is standard across all types of transactions. So it need not be only limited to an open banking scenario per se. So the risk of data applies to across the board. Now, only so in scenarios in India, for example, where the regulation is still not clear, or rather has not openly recognized a neobank per se. And today, in the Indian context, neobanking is primarily a technology layer on top of the banking API stack. That is where the seamless flow of data is a little bit of a concern, especially because two things. One is the security bit, which is there, which is understandable, and I'm sure any tech stack can be as evolved. So it could be a fintech tech stack, which could be much better evolved also in some cases. But however, regulatorily, there is a limitation to which a bank can actually expose customer data. So that is where the entire play happens, and that uniformity is something which I think is a hindrance. So today it is left to to the bank to actually understand the regulation and interpret it as per its own KYC understanding and data understanding. So that is where the issue is. So every bank actually will have a varied understanding depending on individual capability and individual interpretation of the regulation, and that is something which is not very conducive to this environment. Now, till the time that standardization can be reached, we will have to play it in a format where in a non-regulated scenario or in a regulated scenario, how far or how well can we support the overall ecosystem to build solutions or customer interfaces which are better than what the standard and traditional bank is providing. So that is one thing. Given that there are certain countries, so especially in Europe where GDPR is well prevalent, and in India where IDPR is something which is in the building. So things, I mean, the entire data privacy regulations will come in, okay, but till that time, customer data control and customer data protection is something that is not negotiable at any way in the form of getting leaked. But having said that, leveraging data in terms of behaviorals, in terms of lookalikes, in terms of building the entire front end for for a better customer experience is always something that should be looked at. And there are ways and means in which banks are finding techniques to hand over that data. The other part of it is the authentication bit, which I touched upon in my last conversation. The authentication, or rather the security in terms of banking transactions happening. Now, again, this is something which is left to interpretation in today's date. Now, if there is a standardized rail in that, and there is, of course, there is two-factor which is identified in India. I mean, India is the one of those countries which is where two-factor is extremely prevalent. So, I mean, that is a guidance which is there. But at the end of the day, can we expand the horizon of two-factor? Can we get the newer variables in terms of behaviorals, etc., which can come in as a formal factor of authentication? Can there be authentication outside of in a secured environment, but outside the banking environment? These are things that needs to gain clarity. And if these gain clarity, you will see newer models in which will emerge in this new banking space, and you will have much better transaction delivery which happens on the customer layer. I mean, it is imperative that the entire data security bit is critical. So while the stack protects it, there is another way of looking at it also, which is the customer side of it. So can we enable a lot more control in the customer layer and allow the customer to control his data flow? So that's another leg which is emerging. And like you asked me earlier, how is digital changing behavior? Now, this is one important piece at the customer end, whether he is aware and understands the overall risk and therefore maintains and manages his own control layer on the customer layer. So that's an incremental bit in this entire piece. But having said that, I think the entire data security bit is a crucial concern. One, from the standardization perspective in terms of how it should flow seamlessly, and two, from how is it managed and maintained in the various environments that we're talking about. The cost of maintaining that security is quite high. So that itself, has to be understood by the neobank players. And in the Indian context, where we find many of them mushrooming in today's date, the understanding has to be better taken from a security layer perspective. And again, I mean, the entire thing cannot be compromised at the cost of customer experience. So that's critical and has to be understood well.
Thank you, Topendra. It seems that we have lost João. So, Mariana, you had touched upon the issue of security in your previous remarks. Would you like to add something in this regard?
Yeah, that would be great. So the central bank has really shown a lot of concern about security, not only in the open banking ecosystem and environment, but on the whole financial services and payment ecosystem. And what what they've been doing so far is we had, I think, from 2018 a regulation about cybersecurity and this whole regulated ecosystem. So it's interesting because it's a risk-based approach, kind of a regulation that really built this basic security approach that every institution has to follow. And as he mentioned as Joandra mentioned in his early remarks, it right now for the open banking ecosystem, you have to be a regulated entity. So this is already something that really explains how you already have a basic security and data protection framework that really bounds this whole open banking ecosystem. So this is something. Another thing that I would love to highlight is, as Tapendra was mentioning, how important it is to get right the part of authentication. And of course, this is a balance between user experience and security. But I'm fairly positive that we are already in a stage of technology development where we can both afford a good experience and make sure that we make this this adjustments about authentication and authorization really right. So I believe this is the focus, where the focus should be. Making sure that you have a flow for confirmation and for authentication. You have strong, robust technology in that part. And more specifically, we've been advocating for mutual TLS on everything on open banking, because we believe this is really brings robust security on this. But I love to go back to my point about trying to build standards that are simple, because complexity is the enemy of security, right? So and we have been seeing in multiple countries, adoption of FAPI and this kind of thing that really brings has a huge focus on security, but it's also quite complex. So I think we have room as as an industry globally to find new ways to make sure we have security with less complexity. And I think this is sort of my wish for the future. But as of right now, I would say and really highlight that we have the means to make sure we get both the experience and the security part right.
Thank you, Mariana. We have discussed today the evolution of open banking, the rapid evolution of open banking in the recent years, on the back of a strong consumer pressure as we experience digital services in other areas, such as food delivery. So the banking industry has had to adapt and evolve quite rapidly, and with immense challenges related to privacy and technology. And we've also discussed a little bit the future. How do we see open banking going forward? Digital payments. And I would like to thank our four panelists, Anupan, Tupendra from India, Mariana, and João that has left us. We missed him, from Brazil. And thank you, all of us, for taking the time to discuss this very important trend in the banking industry with us. Shruti, please.
Thank you, everyone, for joining us today. And it's been an honor to have all of you here. I think we learned a lot, and it's been an extremely comprehensive and enlightening discussion. I hope today's forum has made you familiar. The delegates has made you familiar with India and Brazil's enabling policy environment, strengths, and vast opportunities associated with the open banking sector. Thank you so much for your time, and I wish you a great morning and a great evening. Thank you.
Thank you.